Hello, welcome back. Once again, we had a steep decline in Chinese stocks as the US actually listed some companies, 5 companies actually, for potential delisting, and this actually caused concern as expected. It has been a long thing. This started about a year ago when the US has actually mentioned that they would potentially think about delisting some companies that were not presenting the necessary paperwork in order to make sure that there is no fraud behind their numbers. And so the SEC actually came back with an announcement today, Friday, and named 5 Chinese companies that could face potential delisting. And this caused a massive decline in all sorts of Chinese companies, and we're going to examine what happened in some of those. But in this article, I'm mainly talking about Alibaba, and down the line, I'm going to be talking more about what happened and whether it would be a concern to own Alibaba right now. And you may want to stay tuned because we're going to go a little bit deep and see some of the finer details here. And I think it's going to be interesting. And if you are new here, please leave a like because that really helps bring the content to more people. And you may consider subscribing because I'm creating all sorts of videos that I think you're going to be finding super helpful for your investing. Okay, so let's go here. It looks like the Chinese index today dropped about 10% really, which is a very steep decline, of course. But I wanted to point out the actual announcement that the SEC made here, and you will see the companies, the 5 companies that were actually mentioned in this article. This is Beijing, a very interesting name here, Yam China Holdings, Zai Lab Limited, ACM Research, and HUTCHMED are the 5 companies that have been mentioned in the announcement here. And what I wanted to show you is what happened today in the markets. Just quickly, you will see that JD actually plummeted almost 16%, and it's a company that I made a video for, and now we're getting an even better price and maybe worth revisiting. I will add a link in the description, and you can actually find a link at the very end of this video to watch that if you want. And some other companies here like Baidu declined 5%, Neo declined a lot as well. Alibaba declined 7%, Leo was like 12%. And so many companies actually lost a lot of their value because of this announcement here. Now, the next thing that I want to examine here is this article, which I think is very interesting, because Alibaba did lose quite some value today as well. It actually didn't lose 8%. I think it, if I'm not mistaken, I think it lost like 6 or 7% at the end. Actually, I can check that quite quickly. So let me see here how much Alibaba lost today. Okay, yeah, it was about 6.6% here. But let's examine what happened here. That's the article. And there are concerns, of course, that Alibaba will eventually be one of these companies that will also have a fear of getting delisted and may actually be mentioned by the SEC. And the SEC does have about 200 stocks actually that they are, and companies that they are thinking about, that are Chinese companies that have some potential danger. And Alibaba could be one of those. But the thing is there really an actual concern of Alibaba getting delisted? That's what the point is. And as you can see, the article points to the Alibaba's delisting risk is being back again, as you can expect, and mentions the companies that were actually mentioned. And now the article discusses, will Alibaba shares be delisted? And there are a couple of things that are very interesting here. If a delist even happens for Alibaba, the depository receipts, as they are called, the ADRs, could they only get delisted in 2024? So it's going to take a while before that happens, if that ever happens. So it's not like this will be like a very quick thing, and Alibaba has to present paperwork like next week or so. This will take some time, and they do have time to actually present the financial statements, as you see here, to the public board that needs to audit the information. Or they could even, voluntarily withdraw their ADR listings and just offer their shares in Hong Kong Stock Exchange. I don't think they will want to do that, though, and we will discuss why a little bit later. And as the article mentions, and I have mentioned in many of my videos, you need to be focusing on free cash flow and sales growth. Yes, not really ADR risk. And a very interesting table here points to the businesses of Alibaba here, 2020 and 2021, you can actually see that apart from customer management here, which has lost a little bit of money, everything else has been going higher. So look at that, 56 to 67, 3 to 4, 10 to 11, all of these businesses, actually all of them, apart from this one which has marginally lost a little bit of money, all of them are doing really, really well here and are losing money. And you can actually see the percentages here. This is like a 1% loss of customer management, but everything else is like in the plus. So, and actually some of them are doing really, really well, as you can see. Or cloud, for instance, is doing pretty well. Now, the other thing that I wanted to point out here is that there are always some risks with Alibaba, but they will probably more than likely be temporary, because there will, I'm pretty sure, be some sort of a consensus eventually and some sort of an agreement between the US and China. And even if that doesn't happen, even if, let's say, the stock gets delisted, you may have a short-term pain and the company may lose a little bit of its stock price as well. However, it's making so much money that eventually it will have to come back, because free cash flow matters a lot, and we're at a point where the free cash flow that the company is making is like 8 times its whole market value, and this is absolutely, and that's about the annual free cash flow, and this is absolutely insane. I mean, for a company of that caliber and that kind of growth, I mean, this should be at least double here. So yeah, I don't think that Alibaba will be below 100 for a long time, to tell you the truth, but it can happen because of the sentiment, and you will see that this kind of announcement where the SEC mentioned 5 different companies, other companies, for a potential delisting, and then Alibaba goes down 7%. You can see the fear here, and when this kind of fear happens, I like to be around because I can take advantage of that and buy as low as possible. This is why I bought more Alibaba yesterday, and frankly, if it goes below 80, then I'm actually thinking of potentially adding some more even. I really consider this one to be a very, very interesting opportunity right now that can can become a multi-bagger for me, really, and I wouldn't be surprised if I may make 5x in this investment in a few years, though I don't expect it to be happening anytime soon. Now, you will see here that the article points to, after adjusting Alibaba's market cap for its net cash, the free cash flow is even cheaper. The price to free cash flow ratio drops from 9x to 7x, and as you can understand, a 7x price to free cash flow is absolutely insane. I mean, this is super low for such a company. So I love that, and I'm a net buyer for sure of Alibaba. Like, I'm not even selling anything really. I'm just a buyer. So the other thing that I think is very, very interesting here, look at this article. You may not have seen that. China and US expected to reach consensus soon in audit talks. Okay. As you can see here, the SEC had said that it has identified a total of 273 companies that were at risk. Hasn't disclosed any names now. And now that's interesting, because if they do disclose names and Alibaba is there, you could expect it to go down even more. So I wouldn't be surprised if that happens. So I'm actually waiting for that. If that happens, then I will be accumulating more shares after the decline, of course. This is a very, very interesting thing that I really, really have in mind here for a potential play down the line. The interesting thing, though, is that on Friday, the two sources said consultations were moving relatively smoothly, as you can see here, with one saying that a consensus on audit and regulatory cooperation is expected as soon as possible. So that's very, very interesting here. Now, if again that announcement happens where Alibaba is mentioned, you may have a little bit of a decline, and then you can definitely think about potentially buying, because you're going to be getting it at an even cheaper price. But I think this is what will happen here. There were some different views on auditing standards before, but it is still moving forward in a positive way. And the next step for both parties is to continue to advance in depth on more details. So there is way more to be gained here by by an agreement, way more, than having a disagreement on all sorts of companies. And I think that this personally acts as a fantastic way to give you better and cheaper shares, really. Cheaper, really, because better, they're good anyway. But it's a measure of actually potentially offering cheaper shares. That's how I see it like, and I don't get affected by it, because I know, and I'm pretty sure, that in a year from now, or maybe 2 years from now, this would not even be a thing. So it would be totally forgotten, I'm pretty sure. And even if some companies get delisted, I mean, okay, it can happen. I don't think that will affect large behemoths like Alibaba that much. In the long term, I'm pretty certain that it won't. In the short term, it will, but in the long term, there's no way. I mean, there's so much free cash flow here that's just impossible. So I hope you enjoyed the video. Hope that gave you some of the information that you may not have seen elsewhere, and it helped you a little bit make your investment decisions. And don't be scared of these things. Again, as I mentioned in multiple videos, the price of the stock can go down exceedingly low, and it could be completely out of the ordinary and completely unexpected, and it may not make any sense. But that's exactly how the stock market works, because it's about the sentiment of people in many cases, and such cases right now are Chinese stocks because of this fear porn that's going on around. So thanks for watching this one. I hope you enjoyed the video. If you did like it, as I mentioned earlier, take a look at the JD.com and the video that I made earlier about it, and you can see the valuation for that. It's a very, very interesting company to have in your shortlist. Thanks for watching again, and I'll see you soon. Bye bye.